Now let's welcome in Jahangir Aziz, Head of Emerging Market Economics Research at JPMorgan. Jahangir, great to have you back in the program. Thank you very much for your time. Jahangir, I went with the line. Fed really provided no new information in that sense. Did you find anything new, or should we go with the line that they don't know? So how could we don't know. No one knows. What's your sense? What did you make of it?
Look, there was no real interest on the rate decision. That was universally known, right? So they were going to go on hold. So it was mostly on the SEP and in the press conference. I think on the SEP, it moved in the predicted direction. It lowered growth and it increased inflation and it increased unemployment. I think the only place where I think there is some difference between what's in market pricing and what is mostly consensus view is that they still held on to 2 rate cuts instead of moving to a 1 rate cut. And they, to be fair, they also took out 1 rate cut in 2026, which the market and we still have. So apart from these minor differences, I don't think there was much of a surprise of any kind in the press statement or in the press conference or in the FOMC statement by itself.
Got that. There's this one thing, and kind of this new, since the last we spoke, actually, even from compared to early last week, there is this Iran-Israel conflict now, and oil prices are up some $15 since. I just wanted to, the non-reaction, so as to speak, in the dollar and US bonds, which are typically considered safe havens and are bought when there is this kind of escalation around the world. How would you read too much into it? How would you explain it, Jahangir?
Look, at this point, there are various factors playing on the US dollar. US dollar as a safe haven has been pushed back over the last 3 or 4 months, as you well know, right? So I think that safe haven status, if you want to transfer onto geopolitics, probably there is. But I don't think that the geopolitical tensions have really disrupted the oil market in a way that changes our views in inflation or changes our views on interest rate and other financial variables. Yes, oil prices have moved up 15%, but oil prices have moved up 15%, after the increase in oil supplies from OPEC Plus happened, which brought down oil prices by roughly about 10, 12%. So I think we are more or less back to where we were before the OPEC oil increase. So I think the market is looking for is what happens next, right? In the sense that, does the conflict widen? Does the conflict actually disrupt oil supplies? And I think if that happens, I think the oil market moves. And I think at that point, dollar once again becomes a safe haven, or gold becomes a safe haven. Gold is the new dollar, so.
Yeah, that's a great point, Jahangir. In fact, let me ask you about that. Good morning, Surabhi here. Between the dollar and gold, what is the new normal for safe haven assets? Because everything's been tossed up. Even US bonds used to be safe haven, but are they, given the other concerns around there? I'm asking you an unfair hypothetical question, but if this escalates, where would you expect the money to move?
Look, I think temporarily the money moves into dollars but mostly into gold. I think that's where the move is going to be based on what's happened over the last 3 months, where people haven't really moved away from the dollar. What they have done is that they've kept, their long positions on US risk assets. They've simply increased the amount of hedging that I've done. And I think the amount of hedging falls down because you get into some sort of a safe haven category on the dollar. What I really think matters is how long does this disruption last? So if you do get a spike in oil prices, but it's a 2-week, 3-week phenomenon, I do not really think there's going to be much of a chasing of dollar as a safe haven, simply because none of the basic fundamental variables get that badly affected if it's just a 2 or 3 week event. The question is that, does it become a sustained event? If it does become a sustained event, yes. then we will have to go back to the drawing board and have to rethink the last 3 months of dollar positioning and the way in which we have looked at dollar. But I do not see that happening at this point. You could get a disruption, but it's likely to be short-lived. If it's short-lived, I don't think much change happens to the way in which people have been looking at the dollar over the last 3-4 months.
All right. Hi, Jahangir. Good morning. Good to see you again. What about the U.S. economy? You think it's going to slip into a recession at some time in 2025? Is that the base case you're working with?
No. So I think with the de-escalation that took place first with China and then with the rest of the world, again, the de-escalation is questioned. I mean, there's uncertainty around the de-escalation. The IEEPA-related tariffs, which have been ruled to be inadmissible by the lower court, there's a stay on that. The federal court is going to hear it only on July 31st, so that's quite a bit away. And then it goes to the Supreme Court. So I think that, for the time being, things stay as they are. The question is what happens after that. And I think that after that, it depends pretty much on how the Supreme Court comes down. If they do not side with the lower court and they say that the White House can use IEEPA to enforce tariff, then we are back again to where we were about a month back. But suppose it doesn't. Suppose it actually says it is inadmissible. Then our view is that you are going to see a new set of tariffs being imposed on using different options and different methods. And then we are back again to that uncertainty as to what is the actual impact of these new tariffs. So I think there's a lot of uncertainty still going on. And so in terms of how that impacts the economy, I think at this point in time, because of the de-escalation that has happened and because of the front loading of imports that have taken place in the first quarter, we do no longer have a recession, the baseline for 2025. However, we still think that the risks of recession are still elevated. And if you do get another disruptive tariff uncertainty related reaction in the market and in the economy, then those recession risks are back. Just because we haven't seen pain, that doesn't mean pain isn't going to happen to us.
That Jahangir, tell me if this analogy is correct. I'm hearing you carefully, and it seems to me from everything that you describe that we are in the very beautiful, peaceful eye of the storm. And the eye of the storm is always very peaceful, right? Because, there's a pause on tariffs and we don't know what the actual numbers are, and because at least this Middle East conflict is, limited at this point in time. But it is the eye of the storm, is it not?
So, I wouldn't call it the eye of the storm. I think even now, tariffs to me are probably a bigger risk, and how tariffs evolve post the court decision to us is still a bigger risk than the flaring up of geopolitics. There's obviously a risk in the near term, but I think if you think about in the next 6 to 9 months term, I think that's still a bigger risk. U.S. fiscal policy is also a bigger risk. But I think that, in situations like these, typically, things happen much later than you think it'll happen. But when it does happen, it is worse than what you thought in the first place. So what we are looking at is probably a delay and in the recession or in the slowing down of the economy, in the spike in inflation, etc. But, as Chair Powell said, it is going to happen because we know that people are paying significant amount of tariffs, and either that gets absorbed into lower margins or in higher inflation. And when that happens, the economy will react.
So since you brought in eye of the storm and we're also in a nuclear kind of denuclearization. It just struck me during Trump 1.0. Do you remember there was a news report which said that Trump in a private meeting suggested that why not launch a nuclear weapon into a hurricane to try and disrupt it? You guys remember it? No.
Oh God, something of that sort, yeah. Anything.
But it was.
But Jahangir's point is well taken. What he's saying is that you might not get that recession this year. It's coming. It's a storm. It's building. It's coming. right now might be the
But
eye of the storm.
Absolutely, eye of the storm. But I would just say, it was a news report never confirmed, and the news report essentially quoted sources. I mean, as I said that he never suggested. You're smiling, Jahangir.
Yeah, I mean, look, as I said, just because it hasn't filtered in, I think there's a sense that it is not going to happen.
Yeah.
But we know that almost everything that we have seen so far, it is getting to a point where we will start seeing the impact. And the question is, how bad is the impact and how quickly the impact transmits to the economy?
Yeah.
My sense is that this time around, maybe it is delayed further, largely because there has been, people front running this tariff war with significant amount of imports and inventory accumulation, and that will take time to dissipate through the system. So what we might just get is not a bad Q3, but a bad Q4 and a bad Q1 26.
Okay, so further stretched out in that sense. Jahangir, thank you very much. Great conversation as always. Appreciate you joining us here on CNBC TV 18.